Good morning, traders. Welcome to Wednesday of this beautiful week. Make sure to swing over to ssftg.com/brief to grab your morning brief levels. Before we jump on in, we always need to check the news, see what's going on today, and more importantly, when it's going on, so that we're not taken by surprise by anything. So, starting off on the news calendar first here. We do have some larger news announcements today, but realistically, there's only two of them, and one of them is specifically for crude oil. So how much you want to pay attention to that, I guess, is up to you. But as far as the news goes, at 8:30 we do have the core CPI for February, forecasted 0.2%. And then as far as small news, medium news, all the way until crude oil inventories at 10:30, forecasted 0.816 million. We'll see what API says about that. The last one was, man, an incredible 21.5 million. So it's going to be very interesting to see what's going on with that monstrous build. But there's not really any other news going on. So as far as the crude oil inventories, the forecast is 0.816 million. If we look at yesterday's API report, typically when we're looking at yesterday's API report, there we go, it'll give us a heads up as to what to expect. The API came out at a positive 12.7 million. Well, the last time we saw the API, it was it was a very small API, and it came out at a positive 20-something million. So now we have a negative 0.83, which was the forecast. It came out as an actual 12.7. That doesn't give me a whole lot of hope going into today. Realistically, we're probably going to see another massive build again, which should technically be bearish, and the market is finally seeming like it's responding in the right way. But anyway, we'll get to those charts in a minute. With all of the news out of the way, speaking of charts, we can get into those now. So charts for today being 3/10 of 2021. First up on the list is the Nasdaq with an ascending wedge trying to get a rotation back higher. We do have the L5 base off of this low, and it did end up being a two-legged correction down before finding a reversal back up. As wild as that weekend gap was, and as funky as that was, after that weekend gap, in hindsight at least, they did play by the rules relatively well, at least from a measured move perspective and a few other things that we were watching already. There's some nice bounces there. Was I expecting a full-blown reversal? No, not really. But, I mean, realistically, that's what we've got on our hands here. And with this monstrous move to the upside, I can see very obviously the sellers gave up right there. It doesn't really need a microscope to find that one. Whenever you've got a giant breakout move like that leaves behind kind of this open window, that's going to be the breakout point. And very likely, if we were to draw a volume node on this, if we go across these, there's likely a VVP there because it didn't have a chance to transact any volume. So this becomes a major point of interest as far as the market is concerned from an objective standpoint, because remember, the job of the market is to fill orders. If it leaves behind these big VVPs where it just didn't fill anything because there wasn't a chance to, it doesn't like that. It has a tendency to want to come back to fill that in. Along with that, we've got the lows of the wedge. We also have the bullish L2 looking for more continuation. Everything is lining up for more, just a little bit further down first. Then over on the S&P with it's a relatively similar situation in terms of the Nasdaq to the S&P, of course, but there are some definitive differences. The S&P has a very nice ascending wedge, but it rotated off of the highs almost perfectly. And with that perfect test of the top, it seems as though we've got a bit of a V-top formation where it moved up and fell in just about the same amount of strength. And we're seeing a little bit of bouncing in the exact same area. So this is either one of two things that we're seeing here. This is continuation buyers who are trying to get the bulls to prop this market up for a continued breakout to keep the trend going. It's going to be difficult considering that we've got three obvious highs along the way, but one of those highs is that awkward weekend gap one. So you could argue, there definitely is a reason to believe that buyers might want to try to go a little bit further up. That said, the one very obvious thing that's standing out here is there is a massive amount of divergence across the highs here that is just saying, you might want to be a little bit careful. The undertow of this might just suck this thing right back down to the bottom. Then switching gears over to gold with a nearly perfect looking, at the moment, flag pattern. The only caveat that might make it look a little bit nicer is if this high fit a bit better. That's about it. And realistically, that's still pretty good. We've got a nice flag formation. The market's respecting it very well. Beginning to pull back, and this is after the market is rotated above that previous major high. Remember, from a trend perspective, in order to reverse a trend, we have lower low, lower high, lower low, lower high, lower low. Oh, not a lower high anymore. Now we have a higher high. Now the job for the bulls is to get a higher low and confirm that higher low by breaking above the swing high. That's what we need to see here for a continuation move back to the upside in terms of a trend reversal, which means that this area is very, very touchy, because a lot of times if they don't break above the highs with conviction, we broke above the top, but then it was lower high, lower high. Now they're back underneath it trying to hold another lower high. Those aren't good signs. If they can't hold up here, there's a chance that this slips all the way back down to the lows again. From there, there's probably just going to be a truckload of buyers that are waiting, but realistically, that's kind of the situation that we're sitting on here on gold. Then over on crude oil with a descending wedge off of the top. The buyers finally stopped squeezing. This is the relief drive back down. Now, we want to keep an eye on how the volume formed here. Obviously, there's some interest that we'll talk about in a second, but from the bottom to the top, now that we know that this is actually a top, just looking at the volume along the way, what the heck? Come on, there we go. Just looking at the volume along the way, we've got some fairly obvious accumulation volume that was trying to start off, right? We've got building volume to the upside, which suggests that there's accumulation rather than distribution, that they're trying to put in a top. After the weekend gap, though, it jumped all the way up, and it really didn't take much to get things turned all the way back around, considering the volume. Keep in mind, though, this volume happened on a Sunday. So this isn't just a small little bump when compared to everything else. It's a lot of volume that traded hands on a Sunday, and that reversed it as a top going back down. Now, if we continue that volume back on, this gives us an idea that we should begin to see the market want to dive back down to where we were just talking about, wanting to fill in VVPs, not leaving volume behind. Guess where that is? Well, I think it's safe to say we bounced off of that area. So although we do have a descending wedge working its way lower, there are some definitive reasons to believe that buyers may be coming in on this dip to look for more movement to the upside. If we look for further information going beyond this current one here and then going forward, we can see what the volume is on this next drive lower, which is an absolute metric ton of volume. I'm kind of curious, what does that look like if we drag the whole thing forward? Is it really that much? It is really that much. So this gives us a big idea, wow, that we've got some accumulation going on once again. Not only did sellers attempt to try to get movement further down back in the 61s and got reversed on hard, they got squeezed all the way up, and it's fairly obvious that this entire grind, this whole move higher, look where all of this volume is. This whole grind higher was getting absorbed. Well, at least attempting to be. It gapped up over the weekend and then dove right back down into volume. Now we're back underneath it. So if you're looking at this with that context in mind, from a short perspective, sellers need to see this stay under the 64 area, right? We've got to stay underneath here in order to really kind of maintain that proof. And the objective is to get back down into the 61s. From there, bulls may be able to respond and bounce it back up. But there's a lot of volume at play going on here, and there is one heck of a big story going on with crude oil. Then over on the euro, we have a nice bear channel working its way lower. The one big thing that stands out here is the fact that it's setting up to be a bit multi-tiered. Now, the multi-tiered point comes from the fact, well, I mean, it's fairly obvious. It's drawn on the screen here, but we started off with this bear kind of spike and channel working its way lower, and the market is attempting to hold inside of that. When it broke out higher, typically the market's going to want to try to find some level of consistency, something to work with. And, well, what better place than to take this line here and put it on the top here? And sure enough, the market responded. It goes to show how simple the market can be sometimes. We're humans. We're simplistic. We like simple. But now that we had this kind of movement with this wedge and attempted break higher, and it looked really good for the sellers, where are the sellers, right? Why aren't they pushing this lower? This could simply be a major 3 lower high. It looked like that was already over here, but maybe this is just 1, 2, and then 3. That could be the case. The big thing that we're looking at here is the monstrous amount of divergence that happened along the lows, and the fact that, again, the MACD was, well, pile driving to the upside the whole way. That gives us a clue that the underlying context of the market is getting weaker. That doesn't tell us that we necessarily want to be buyers right this second, but it does tell us that the low is going to be nearer than farther away. And typically speaking, when you go into a low, you see a range or a consolidation first. Well, we've got a nice little consolidation here. What better spot than a launching pad for a higher low to begin reversing this back up? And bulls will be looking for a continuation on that momentum to try to keep this going up. If they fail to get that next press higher and really confirm this trend reversal by breaking above that previous swing high, well, we're probably going to slide back down to the lows. Over on Bitcoin, we've got a nice, it looks kind of like a channel, but if you look real close, it is actually a megaphone. The top and bottom are expanding away from each other. We've got a very nice expanding megaphone to the upside, and especially on the top side, it is responding incredibly well to it. Huge amounts of rejection across the top here, and, well, it's some pretty good follow through. It did have a near picture perfect ABCD correction back down, and that does line up with potentially a 3 press wedge, kind of, sort of. So the big thing that we need to see here is that the bulls continue this back to the upside and keep ramping this back higher. The brick wall that they're going to have to work through is this stopping point that really hit before. That's what held the market off last time, around 51,250 or so. It was a brick wall, stopped the market in its tracks. When it was able to make it above, it very quickly reversed back down with a 2-legged move. Now the question is, can the buyers break through, or do they hit that same brick wall and start rotating back down to the megaphone? And then finally, over on Ethereum, continuing this massive bull channel to the upside. A lot of bull conviction, and we just keep skipping off the midline. It's not really breaking higher. It's not really breaking lower. It's just kind of hanging out here at the middle. It's going to need to do one of two things to keep this trend going. We're either going to have to really convictively break out above the highs, really show some conviction back up, scorch back through these 1750s, get back through 1800s, rally up into the 1850s, maybe even into the 1900s. Like, really hit the gas pedal and get out of here. That would be objective number one, which obviously a lot of bulls are going to be a big fan of. And the other scenario is off of this midline, we see another market backup back down to the channel lows. Now, that may seem a little bit ominous, but remember, down to the channel lows doesn't have to look like this. Right? Down to the channel lows could just do this, where it goes absolutely nowhere until they finally get the ping off the bottom. So, I mean, we might just go into a range for a little while. It might severely pull back. We don't know how it wants to approach it. But either way, the channel low is the objective one way or the other. And that's going to be where a lot of buyers are going to come back in with value. And that might be all it takes to spark that rally to the top of the channel afterward. Alrighty, well, that's going to do it for today. Stay safe out there. Keep those stops in play and let the winners run. I hope you have a fantastic trading day, and we'll see you in the next. Thanks.